Let's get some business news now. South Africa's economy added around 400,000 jobs in the third quarter, despite the country's current slow growth of below 1%. Now, that saw the unemployment rate recede slightly to 31.9%. Stats says formal sector jobs increased by 287,000 in the third quarter, while informal sector employment increased by 29,000 over the same period. To help unpack these numbers further, we're joined by the Nedbank chief economist, Nicky Weimar. Nicky, encouraging set of numbers, one could say, given that South Africa's economy is not growing much, we're able to still squeeze out some jobs.
Yes, I think it is good news. Any job creation in an economy like South Africa is just fantastic news. However, I think we do need to see it relative to where we came from, and that is that we've now just slightly exceeded pre-pandemic levels. So, in a sense, the continued job creation is coming from an artificially very low level caused by hard lockdown, by the hit of the pandemic. And now, over the last couple of years, we have seen the economy slowly and surely normalize, or the labor market slowly and surely normalize. And where the jobs have been created have also been in those industries that were exceptionally hard hit by lockdown. Now that we're back to pre-pandemic levels and slightly above, the rate at which we will create jobs going forward will be a function, I think, more of just economic growth. So we've had a normalization from a very extreme, artificially low position.
There were employment losses in key sectors like manufacturing. That was down 50,000. Mining was down 35,000 jobs, and also transport down 20,000 jobs. Should we look into that and say, look, these are encouraging numbers, but because those key sectors weren't providing the employment, it's still looking bleak?
Yeah, I think that's ultimately the story here. So we took a big hit. We fell to a very low level after the pandemic. Then as tourists returned, as hotels normalized, as services were able to operate more normally, we saw a correction. Let's say that we saw a correction. We've had a bit of growth and job creation beyond the point that prevailed prior to the pandemic. Okay, so now that the market's normalized, it becomes a function of growth. And what mining, manufacturing, and all of these industries are telling us is that it's not going well there. But we do know this. And that is because those industries are obviously the most exposed to South Africa's unique problems, which is the electricity shortage, the fact that we have rail infrastructure that is failing, and that we have port inefficiencies. They are heavy energy users and they are exporters. And so ultimately, that's driving up their cost and reducing the amount of goods that they can sell at the end of the day. And at the same time, on the other end of the equation, if you're an exporter, you rely on global growth to drive demand for your product. And we know that the world economy is slowing. China's recovery has not been as robust and as sustainable as many people would have liked. And we know that commodity prices have been weaker. So if you look at it from the perspective of miners and manufacturers, what they are experiencing is that their sales are down and their costs are up dramatically. And so their profits are being squeezed. And if you sit back and do nothing about that, very quickly you won't have a business. And so ultimately, you've got to make a decision. And the decision they clearly are making is to downsize their operations, and included in that, obviously, would be retrenchments. So that, I think, reflects the reality of the day. The extent to which it now will filter through to the rest of the economy, many of those industries from domestic trade to financial services are much more focused on domestic demand, but we know that there's strains there as well. And that is coming through from the fact that we've had an extended run in inflation, just like the rest of the world. We've had to respond with higher interest rates, and the cyclical pressures that are building from that front is putting strain on household income and therefore affecting consumer demand, which, by the way, consumer spending contracted in the second quarter. So I think you've got weakness building up there, but not to the extent that people will yet consider, I think, necessarily large-scale retrenchments. So I think at the end of the day, you probably have fairly stagnant job creation going forward from here.
I guess another encouraging thing is we are due to go into the festive season now. A lot of seasonal jobs come up, especially in retail during this time. That should help prop up the jobs numbers, even if it's for a short while. But looking at the fact that discouraged job seekers were also declining in the third quarter, what would you say is pushing this up? Because when you look at all the economic indicators, everything's quite negative.
Yeah, no, absolutely. And I think there the biggest thing is just that, like I say, services, tourism, food services, hotels, hospitality, all of those industries are actually doing quite well. So on top of the festive season spending coming in, you've also got to consider those industries that have recovered from the pandemic and is seeing fairly robust demand. It might be very area specific and that the Western Cape is doing better than the rest of the country, but nonetheless, we have seen growth there. So I think that's helping. But from a discouraged worker perspective, so clearly the demand for your sort of lower skill type of individuals picking up, that would help them. And then the second thing is I think the drop in petrol and diesel prices have made a big difference to their lives. We still have a very unfortunate economic structure, and that those that really need to be close to the places of employment are situated very far outside and far away from the centres where one would likely be able to get a job. And therefore transportation costs, I think, is a significant driver of the decision to go out there and look for work.
And looking at these particular numbers, we want to have an economy that grows enough to have a sizable dent on that around 31.9% number. What kind of growth are we looking for in the next 5 years or so to try and get a lot of those young people back into work, a lot of those women that are affected by the unemployment in the country back to work?
Well, we're not going to have it over the next 3 years. I mean, I think that is the key point. I don't think that us growing at a slow pace will necessarily result in mass retrenchment like we saw during lockdown. It's not that sort of pressure. You're going to see it in the sectors that are hardest hit by our unique set of problems, especially the structural issues, that being mining and manufacturing. But everywhere else, I think you're just going to see that you're going to have very slow job creation, and certainly too slow to compensate for the growth in the labour market. And we're looking at a growth rate of less than 2%, actually close to an average of 1.6% over the next 3 years. And it's because of the issues that we have that is just holding back growth. And we've mentioned them, your road, rail and port inefficiencies. On top of that, also, of course, a very pressing one is the fact that the electricity shortage remains in place. It may have eased a little bit of late, but we haven't resolved the problem at all.
And what type of growth does our economy need? Is it over 5 to 6% to get us to a point where we have a regular job creation in the country?
Yeah, certainly job creation that at least sort of matches the new entrants into the labour market and start to, add a little bit more to that and like you say, make a dent to that unemployment rate. And in order to get that, I think it's generally agreed that we probably need to grow at over 6% per annum for quite some time. But more importantly, we need to create a certain type of jobs. And that is the problem. We generally have very low skills levels. So we need to create on scale jobs that will absorb the type of labour force we have.
And just one last question before I let you go that's got completely nothing to do with the jobs numbers, of course, around the finance minister taking some leave of absence, being replaced by the electricity minister, Motheo. You think that will have any effect on the market and any of this reportage really affecting how investors view the country?
Yes, I mean, it will have an effect on the market. It will make people uncertain about whether government will have a sort of steady hand there and an experienced hand there to go out and actually steer the fiscal ship in the right direction and certainly meet the plans they've set themselves. Now, remember, in the medium-term budget policy statement, government's aim is actually to reduce and chip away at that very large budget deficit, slow the rate of debt accumulation, and ultimately bring an end to the situation where debt service cost just continues to escalate at a rapid rate and consumes an ever-increasing portion of your limited tax revenue. So that is what we aim to do here, and that's what they aim to do. And the only route through which they can really do that effectively is they've got two levers that they can pull, revenue and expenditure. On the revenue front, we are probably going to see tax increases, but it's likely to be ineffective. If you raise taxes into a stagnant economy, sometimes you actually move backwards rather than forwards in terms of boosting the fiscal coffers. And then that means your only real sort of important and effective tool here is to cut expenditure. And in the medium-term budget policy statement, that is the aim. In real terms, after adjusting for the effects of inflation, you are actually talking about expenditure cuts. Now, that does require someone with credibility, someone with grit, someone with determination and with the will to see it through. And so, I mean, any change in leadership immediately creates a bit of uncertainty. It is disruptive to the staff. And when you've got such a fiscal challenge ahead of you, it will be viewed as something that will probably hurt, investor confidence in South Africa, could cause some instability in the markets. And we've just seen some stability return, which would be unfortunate. I think at the same time, of course, there has been a history, except for a couple of years there during the Zuma years, that we have a long history since democracy of putting sound individuals and capable individuals in charge of national treasury. And hopefully we will do that, even if worse comes to worse. But we don't know what the situation is, and I think it's that uncertainty and the disruption to leadership that could be perceived in a negative light.
Oh, hopefully it doesn't move the needle quite much on the markets. That was Nedbank Chief Economist Nicky Weimar covering also the QLFS numbers that came through from Stats SA.